Welcome back. You're still watching Trading Hour on CNBC TV 18. We have an interesting chat lined up for you. Software and e-commerce services provider Ebix Inc.'s India subsidiary Ebix Cash has filed rock papers for a 6,000 crore rupee IPO. The IPO does not include an offer for sale. Just a little bit about the business. The company has under its umbrella a wide range of services. So they track everything from payment solutions, travel services, fintech, forex, BPO services. I'm naming just a few of their entire portfolio. This is also a company that has gone big on acquisitions. They've acquired majority stake in Cash. They've also acquired a bunch of distressed companies like Trimax IT Infrastructure and several others and have been able to turn them around. So to discuss the business and the outlook, we're now joined by Robin Raina, Chairman of Ebix, in the studio. Robin, good morning. Thanks a lot for joining us. This is Pavitra. First off, I just want to begin by asking you about the business model. Explain that to us a little bit. And of, all of these different verticals that we just took our viewers through, what is the kind of revenue breakup?
So first thing, I think the business model is rather simple. It's my business model is that selling price has to be a lot more than the cost price. I'm in the business of making.
Second standard.
I always like to talk about it because sometimes people forget that.
Yeah, it's the simplest things that matter, right?
It's the simple things that matter. The more you can simplify the business, the better it is. So having said that, we are an on-demand services model. Everything we do is about, first of all, building convergence. I feel that the people have gotten used to silos. Functionalities in finance and insurance operating in silos. Somebody's got to connect all these. Somebody's got to just end-to-end create what I call a financial airport. And that's what the journey we are on. But while we do it, we want to be in the front end creating the distribution markets. We also want to be in the back end powering the technology and then connecting all these pieces together. And that's how you create an end-to-end exchange. And the entire business model is based on transaction-based services, SaaS, on-demand services, and making money on each and every transaction that happens.
And could you do revenue breakup as well?
Actually, before that, let's just, the way you break up your business is payments is one part, one is travel, and the third part, the third leg of your business is fintech, right? So tell us what you do in each of these verticals, and then as she was asking, how much do each of these verticals contribute?
So payments is the largest vertical. 80% plus business comes out of the payments vertical. But in the payments vertical, there are many pieces, but I'll talk about three big pieces. One is remittance, money coming, international remittances, money coming into India, domestic remittance, money moving within India. The other piece is foreign exchange. And the third piece is card businesses. So that's the payments piece. Then you go into the travel piece where we do end-to-end travel. Virtually anything from airlines to hotels to holidays to chartered planes to buses to virtually anything, cabs and everything. We are the largest corporate travel services player. We are the largest in the events travel business. We are number one in Indonesia. We're number one in Philippines and so on. And then you have the third piece, which is the fintech piece. In the fintech piece, we virtually provide a number of technologies at the back-end side, which is lending technology, wealth management technology, travel technology, insurance technology, and then bus exchange technology. And when you look at all of these pieces, all of these are transaction-oriented pieces where we provide licenses, we provide the maintenance of these solutions, and our clients are the who's who of the country and the world. We operate in, for example, in lending and wealth management, we operate in 75 plus countries today. We have clients in.
So what is your profitability like? What has been the hit during COVID? And by when do you hope to scale it back to your target level?
Look, I think first of all, I don't remember the profitability numbers right now, but I can tell you that I think the last 6 months we probably did 300 plus crores in profit. It's been a consistent story. That's a 6-month profit, so you can annualize it. I think it's 630 crores or something if you annualize it. But having said that, our story is a consistent profitability. We have made money each and every day, each and every month, since we have operated in India. Throughout, right? Even through, and this is a COVID hit year, where travel and forex, where we had close to 3,000 people sitting idle at one point, even in a COVID hit year, that's the kind of money we're making. So once travel and forex is back, we obviously feel that we'll have better business opportunities because we are one of the leaders in the market.
In 2022 itself?
In 2022, we do expect travel and forex is coming back, roaringly coming back, simply because, look, on 27th of March, airports are being opened officially. The moment you do that, we have counters sitting at every airport. We are there at all the ports. You know, the travel business starts, internationally. So obviously your revenue numbers should go up and your profitability should go up.
So travel and forex is how much pre-COVID, and what's the current quarterly run rate, just to understand their hit and how much it can go back up?
Look, it's a difficult question to answer. I'll tell you why. Because I'm under the Indian regulatory norms with the DRHP files, I got to stick to what it is. But at the same time, I'll give you rough numbers of what it used to be. On a combined basis, it was doing around 200 million between the two businesses pre-COVID. And as we went into a COVID period, it came down almost to zero. When I say zero, it was like you're doing $1 million between two businesses in a quarter, right? And then it grew to $2.5 million a quarter. Then it grew to $5 million a quarter. Till September, we were at 10 or 12 million a quarter, somewhere around that dollars. And that's obviously a minuscule portion of where we used to be.
So it's crawling, but it'll snowball
coming
probably.
back. Yeah, it is coming
75% of its peak levels as we speak right now. Compared to
well, it is. There's a lot of room. Let's put it that way, for us to go back and get back to where we were.
All right, actually, let's do one thing, Robin. I'm going to request you to please stay on. We'll just take a quick break and we'll be right back, and then let's continue this conversation on the other side.
Hi, welcome back. You're with Trading Hour. We have with us Robin Raina, Chairman of EBIX, who have filed their draft papers with SEBI for an IPO. So, Robin, we've spoken about your different businesses. Now, about this whole plan of an IPO. One is, do you think this is the right market condition for you to be entering, and why are you looking to raise funds if, you're making the kind of money that you say you are?
Look, first of all, whether it's the right time or not, I feel if you're a profitable story, there's always the right time, right? Especially in a market like today, profitability has become the new mantra. Everybody is looking at profitable stories. And here is EBIX Cash, who has always made money, and our entire business model is rather simple, right? If you take my card business out, my EBITDA margin is upwards of 31%, right? So it's a consistently solid, profitable story. What is the goal behind raising this money? I think part of it is to, first of all, the only debt EBIX Cash has is the parent company. There's a little bit of a CCD we have taken. So that CCD will retire. But then the key part is organic and inorganic growth. We want to enter new geographies. I want to be a player in Latin America. I'd like to be a player in the Middle East and so on. And our strategy is to make some acquisitions in these countries and then smuggle in our EBIX Cash products and start marketing those products there. So it's a function of both working capital needs and inorganic growth.
If you could just drill it down to some details. You're raising 6,000 crores. What is the debt that you have on your books right now? How much have you borrowed from your parent company? So from the 6,000 crore, how much will be used to repay that? And how much have you outlined for acquisitions, your geographical expansion?
So roughly, if you look at the 6,000 crores, that's approximately at the current rate is 785 million or something like that. I think dollars. 350 million is the CCD, is a convertible debt instrument that we have with the parent. And remaining is to be utilized for the specifics given in the DRHP. So I'll point people to the DRHP, but basically there are needs of working capital, and then there are acquisitions bucket. That's basically that. There's no secondary. Nobody's trying to take any money out.
So $350 million goes back to the parent to repay the debt, and then there will be no outstanding obligation.
There will be no outstanding obligation.
Okay.
Are there any more acquisitions also that you're looking at? Since you said you are looking to expand globally, get into other markets, is there anything else that is on the anvil?
Look, there's absolutely, that's why we have kept the acquisition bucket in there. I couldn't tell you about the specifics of an acquisition target that we're looking at, but yeah, there is an acquisition bucket. That's been a consistent strategy. Look, in the past also, we made 26 acquisitions in India, and we connected all of them and integrated the technology, centralized all the operations, and we were very successful. Look, you talked in the beginning monologue, you talked about having bought distressed companies like Trimax. And when you consider somebody like that we bought a distressed company and now we are reporting 30% operating margins out of that business, and we have doubled the revenue from where it was, that's been our story.
What's your average ticket size in the payments business?
Look, it's a very complicated answer to. I could spend the next 20 minutes answering that simply because I have so many different pieces
Maybe
in
just
the
a summary.
that it'll be hard to answer that really. Because foreign exchange will have a different ticket size versus, in the card business, it will be a different ticket size. And when you go into
give us some of your largest components.
Well, look, meaning something like, for example, card business, you can virtually have a 15,000 rupee ticket size, right? That's an example. But again, it can vary by the line of business.
We're out of time completely, so I'm going to request one or two word answer from you. In terms of acquisitions, what are you targeting? Would it be in payments? Would it be in travel? Would it be in fintech? If yes, in fintech, where?
It'll be all three actually. All three could be potential targets for us. But in order of priority, it would be fintech, payment solutions, and then travel.
And in fintech, what?
In fintech, there are pieces that we would like to get, more pieces in insurance, claims adjudication, claims settlement, back-end technology for banks.
Robin, it's been a pleasure speaking with you. Look forward to chatting more with you as the days go by, and all the very best for the IPO.
Thank you.
That is Ebix Cash for you, and more about the company's business model. We'll slip into a very short break on that note.